In this talk, we'll go over an example for amortizing your startup costs for your business. The standard rule for amortization is that an intangible asset cost basis is divided by 180 months, and then an expense is taken each month. However, startup costs have additional rules that I will cover in this example. Startup costs are costs that are incurred before the business actually begins operating. And these costs would normally be deductible as business expenses, but cannot be deducted because the business has not began operating. Startup costs are recorded as a current asset. In the month you begin business, you can take a deduction of startup costs of up to $5,000 in the first month. If total startup costs were greater than $50,000, then that initial $5,000 deduction must be reduced dollar for dollar by the amount that exceeds $50,000. Therefore, if your total startup costs were greater than $55,000, there is no initial deduction allowed. However, the remaining or total startup costs can be amortized. This means divide the total startup cost by 180 months, and the resulting amount is the monthly amortization expense that can be deducted. So let's take a look at an example. Best Retail pays $54,000 in startup costs before opening their retail store for business in October of 2014. Let's calculate what their total deduction for amortization of startup costs would be in 2014. Since the total startup costs are greater than $50,000, the initial $5,000 deduction is limited dollar for dollar of the amount over $50,000. Therefore, the initial deduction amount that can be taken for 2014 in the first month is $1,000, which is equal to the $5,000 initial deduction amount minus the $4,000, which exceeds the $50,000 limitation. The remaining startup cost to be amortized then is $53,000, which is the $54,000 minus the initial deduction of $1,000. So we will take the $53,000 that's left to be amortized and divide by 180 months, which equals $294.44 of amortization expense each month. For 2014, we'll take 3 months of amortization expense for October, November, and December. So take 3 times $294.44 per month, and that equals $883.33. Total amortization reported on Form 4562, Depreciation and Amortization, would be $1,883.33 for 2014 in this example.